Welcome to IVoT Eye On Investing, where our experts look at the economy, the market, and particular companies from a long-term fundamental perspective. IVoT Financial Training Inc. is a company committed to making financial mastery accessible to everyone. To learn more, go to IVoT.academy. Today on IVoT Eye On Investing, IVoT market analyst Andrew Tang explains market sentiment, the fear versus greed indicator, and how the best approach is to be contrarian, careful when investors are greedy and aggressive when investors have fear. Right now, the indicator is sitting at 51%, so sentiment is neutral. He then updates us on weak consumer data and the now 80% likelihood for a Fed rate lowering next week. Finally, he has some interesting thoughts on the recent meetings between China, Russia, India, and North Korea, having just returned from Asia himself. Then I take a look at NVIDIA based on their most recent quarterly report using the updated IVoT Forecaster. Could NVIDIA actually be cheap at current levels? Check out our discussion of growth prospects and long-term fundamental valuation. Let's get started.
So welcome back after Labor Day. I'm back from my trip to Australia and Hong Kong. Andrew has taken some time off, and Emile has been steadfast in working his tail off back home. So why don't we start with just kind of getting a little bit of a flavor for where we've been recently. I flew from Dallas to Hong Kong, had a layover, a 4-hour layover. That was a 16-hour flight, then a 9-hour flight to Sydney. And my takeaway from Sydney is it's just like being in the United States, except they drive on the other side of the road. And they have some beaches in the downtown area. But other than that, it didn't feel that different. I did get a chance to go to Brisbane, where my best friend, a guy named Peter Berg, is filming a movie called Mosquito Bowl, and he got me into a scene in the locker room. So there's going to be a Purdue Brown football game, and I'm dressed up in the early 1940s headgear for football, and I'm going to be in a scene for that. Then my wife and I took off and went to Hong Kong and spent 3 days in Hong Kong, which was wonderful. And then we came back, but we're just adjusting now. We're just getting back to being somewhat normal, if you can call it that. So Andrew, where have you been?
Yeah, I came back from Asia trip, Singapore, Malaysia, and Taiwan. 3 countries is, quite an eye-opener. I go to Taiwan every other year or so because I have family there, but Singapore and Malaysia, I always like that region. My first time in Singapore, and I tell you that Singapore has the higher standard of living, out of the 3 countries. Tourism is alive and well, especially in Singapore and Malaysia. It's hot. It's very hot. I don't advise people to travel to that part of the country or to part of the world during the summer, but it was quite amazing. One of the more notable things in Malaysia I did was eating durians. Durians are just very, very delicious. It's a delicacy, but definitely it's not for everyone.
What is that? Is that like a fish or something?
Durian, it's a fruit with all these crazy spikes. Yeah, it's quite delicious, and the best are in Malaysia. And I also realized that tourism has been not so vibrant in Taiwan because of the deteriorating relationship between China and Taiwan ever since, the current leader was elected, going back to 2019, actually. Other than that, I'm just grateful to be back. Kids are back at school, back to normal schedule. I couldn't be happier. Yeah.
So, all right. Well, I've just been working my ass off, as you said, on IVoT, where we are now ready officially to launch through our partners, including Chapwood, Ed's company here next week. So that's super exciting. And then launch to the public in the beginning of October. So, and we're also launching through our partners in Africa, of all places. So next week. So we're excited. We think we have a super innovative program, and as you all have seen, they end up in our forecaster tools, which are the focus point of, or one of the focal points of this show. So anyway, I'm really excited to launch that, and it'll be a continuous improvement project after that. But I think we've got a really solid product to start with.
Well, I'm really happy we've been able to do these shows leading up to that. And in each one of these shows, we take a little bit of time and have Andrew give us his understanding of what's happening in the world markets. And then we dive into the forecaster with you, Emile. And today we're going to be doing NVIDIA, which is very timely given that they've come out with their earnings recently. And there's been a lot of rhetoric around the chip maker. So, Andrew, why don't you take us through what you see in the world today, given that you just came back from overseas?
Yeah, great. I'll just highlight three things, this morning. And, one of the things is that we look at how we look at the market. Are we too euphoric or are we too pessimistic about the market? And that's really done through the fear and greed meter or the signal. So the fear and greed meter works with 1 to 100, or 0 to 100. 0 is very pessimistic, and 100, it's very, very euphoric about the market or about investing into the stock market in general. So right now, the latest read is 51. And as of the close of last week, it's about 52. So we're finally back from the greed or extreme greed area back to the middle in the neutral zone. And so all this is happening while the market or the S&P 500, namely, stay at very, very high levels. So this tells me there is great enthusiasm in investing, and the participation rate of investing in the stock market is quite high. So we're seeing that new levels of retail investors participating. I think all generations, young and old. And that it's truly outstanding as we see, even though we're a neutral zone, even though we have this kind of sell-off, but the participation rate in the stock market is quite high.
So Andrew, one of the key components of that is that individual investors usually do the wrong thing at the wrong time. So when people are very excited, that's when you should be fearful. And when people are fearful is when you should be excited.
You're absolutely right about that. And that's why when we see the meter goes to extreme greed in the 70 to high 70 range, then we always say that caution is warranted and you have to be careful. The fact that this meter or the signal retrace from extreme greed to neutral zone, it indicates to us that it has already gone through some level of consolidation. And this signal is a summation with the options market as well as the different quantitative signals like the market's breadth, spread indicators, and all that. So when you add all that together, for me, it's very positive for me to see the indicator retrace back to neutral. Meanwhile, we didn't have a nasty sell-off. And so that tells me that some bad economic news is good for corporations, and then there are multiple things that are happening. So as we alluded before from the previous shows, that the investor sentiment is all-time high. We have lots of new investments. We have, a situation that we are seeing more recognition of the convergence of multiple innovation platforms, AI being one of them. Digital assets is growing. That's another one. And then we also have a confirmation from NVIDIA CEO, which I'm sure we'll get into this later, that the growth is not exactly slowing, that it's not the end of the world, that there is no such thing as an AI bubble popping. And right now is more like a digestion phase where all this money has been deployed, all the money has been committed, and now let's see what we can do with what we just ate, what we just, we need to chew what we just swallowed. So that's more of what's going on, or a reflection of what's going on. And then you see a continuous weakening on the main street economic activities like manufacturing, the service sector. It's still, hovering at, anemic levels. They're not great. Consumer sentiment is still all-time low. Job security, people feel that they're still not so sure about getting another job soon enough if they do lose the current jobs. So you're seeing a divergence, right? Investor sentiment is all-time high, consumer sentiment is all-time low. So that's the situation that we have going on.
That's kind of a bizarre, contradiction in a way, I guess, meaning, and I guess what do we think about that? Because obviously one good thing is I'm sure you were going to mention is that the Fed decision is coming, and with the economy looking slow, that probably is going to lead to a lowering of rates coming up. That's, I guess, what the market expects, right?
Yeah,
But
that's you can see that as a reflection in the 10-year yield. So the 10-year treasury yield has dropped significantly, and then that's also affecting the mortgage rate also. So a 30-year fixed jumbo mortgage rate has dropped almost one full percentage point. In the beginning of the year, it was close to 7.25. Now it's very close, 7.28, somewhere around there. So we see that the different measure of interest rate versus the Fed funds rate have already moved. And so you can say that the 10-year yield drop, it's a risk off situation, right? Or you can say that is an anticipation of the front end of the yield curve coming down. And so right now, as I look at Polymarket, the probability of a 25 basis points drop, it's over 80%.
right,
And the probability of a 50 basis point reduction in September have creeped up to 15%. So we
yeah.
see that has been moving in the right direction. And some even say that the Federal Reserve might not lower rates soon enough to save the economy. So I have to, look at that a little bit more. So that's pretty much a summary of what's going on right now. So.
Well, I want you to just finish up with
Sure.
the Chinese President Xi Jinping
Yes.
hosting the parade in Tiananmen Square. What are your thoughts on that, and what signals does that you know put out for the rest of the world?
Yeah, one photo, or just the photos or the videos taken from that event, really speaks 1,000 words. So the fact that North Korean Kim Jong Un and Putin and Xi Jinping and Muti, getting together, it really speaks a lot about the other countries trying to band together and to find ways around how they can do business together and away from the US. Now, a lot of talk has a lot of chatter has been talking about how the US dollar is going to be dethroned. I really do not believe this is going to happen anytime soon. The US dollar, it's still the global currency, and that is very strong out there. So, probably in my lifetime, I won't even see the US dollar being dethroned. That's one. Second is that the China took this opportunity to really show off their advanced weapon systems. Okay, so most notably is the supersonic missiles that we have seen, and they have retired some of the weapons and the planes that they have, and so most of the weapons that they have showing off, they are quite new, and they're doing that on purpose just to show off their military might, against what they might do to Taiwan. Who knows? But other than that, it's really centered around energy. Okay, energy is a big topic, from that summit there, instead of just, looking at the military might. Obviously, we all know that there has been sanctions that have put on Russia, but that does not prohibit, by, by the agreement that the Russia cannot sell energy to India, to China, right, et cetera, et cetera. And that's why the tariffs on India from the US is to help minimize that, is to try to persuade India to stop buying oil from Russia so that Russia can feel more pain, if you will, in relations to the war with Ukraine. But one takeaway from this is that we are going through a time that energy, specifically electricity need, it's going through the roof. We cannot produce energy soon enough and quick enough. And one solution is solar. So solar producing electricity, it is still the most efficient way. And right now, China is number one when it comes to renewable electricity generation. I'm talking about leading by a wide margin. Okay. And so that it's something to pay attention to, and it's quite profound. We are not hearing any kind of negative news as a result of this yet, but you will. We will soon hear more about that.
Very good information, Andrew. I always love hearing your summary of the world. And Emile, why don't you take us through the IVoT Forecaster with NVIDIA?
Yeah, so we're going to do an update on NVIDIA. This is actually our third program in which we've discussed the stock and the company. This is based on their most recently reported numbers and our updated IVoT Forecaster tool. So I'm just going to head straight to the tool and let's start talking about it. So, and then I'm going to let Andrew, who I really feel like, this again is the IVoT platform that we're launching next week with Ed. We can go to our toolbox here and we can pick up our company tools here. We have a menu of company tools that you can see. We'll be growing that menu every month. And we have our NVIDIA tool open. So NVIDIA's right now trading at this gets updated daily. It's $181 on here. I don't know, where's it trading right now? It's not actually real time in the tool, but close enough. And so this is, it's $4.5 trillion market cap roughly. So that's just the basics, right? Now, I think the one thing though to understand before we go into the numbers is, what does that market cap really mean? From an IVoT perspective, the market cap is telling us what the market expects cash flow to be in 3 years. That's the way we look at it. In other words, the market is a forecasting machine for the future. And from an IVoT perspective, we say, well, the market can't look further than 3 years. It's just too much can happen. But you can do a legitimate forecast for 3 years. So in this case, the market is telling us that the cash flow value of NVIDIA in 3 years will be $180 a share, roughly. Now, the current cash flow value, based on the $23 billion they just reported in the most recent quarter, is $96 a share. So, okay, so basically the market's saying that over the next 3 years, the cash flow value will continue to grow and reach $180. Seems pretty clear, hopefully, right? So you're not paying. What we're saying is, based on our calculations, it's worth $96 right now, based on the 23 billion. It grew, right? Because last year cash flow in the same quarter was 15 billion, right? So cash flow grew by 53% in the most recent quarter. Really an astonishing rate for a company of this size. Now, I think maybe the biggest company in the world. And the implied value went from 62 to 96. So the implied value was actually up by, that's what, about 30, 40% right there. Close, right? Actually, no, 60 to 90, 50% cash flow value increase. So is that making sense to you guys, and to hopefully to our audience? Is that what I'm saying so far?
But this does not include a price earnings multiple. This just includes this is just the enterprise value per share.
Well, this is based on cash flow. We don't believe in PE. PE is full of all kinds of noise. PE is a problematic measuring device. So we replace that with cash flow, and we use a multiple of cash flow. So it's based on the earnings of the company. It's not based on a balance sheet. It's saying that they just did 23 billion in cash flow, And the way we calculate that, which you learn when you come to our platform how to do it, it means it's worth, again, roughly $2.5 trillion right now, but the market's valuing it at $4.5 trillion. Why is the market valuing it so much more than what it's currently worth? Because it's growing its value at 50% each year right now. Now, the interesting thing is, if you look, that $180 versus what it's worth right now of 96 seems expensive. But actually, if you think about it, or you compound that growth rate from 96, that's only 20% cash flow growth over the next 3 years to get to 180. And that's actually then, it would appear that the market is suggesting a significant slowdown in cash flow growth at NVIDIA going forward, based on the stock price, believe it or not, right? That's the way we look at it at IVoT. And so our job as investors is to make our own forecast of future cash flow and decide what we think it's going to be worth. And I'll just give you a quick example of this. One of the ways we do that just real quick is to do a trend analysis, right? We say, well, what if they continue to grow sales at 56%? That, kind of to Andrew's point, we're early on in the cycle here, that this is not going to slow down. That would give us a value in 3 years of $352, or a 94% return. So in other words, if they can continue to grow sales at this rate, then right now, from an IVoT cash flow valuation perspective, the stock looks quite inexpensive, believe it or not, at $4.5 trillion. Now, that's a very high level analysis into which we would, in our platform, help you dig in and talk about competition and talk about markets and talk about all the issues. We actually have a level 2 tool that goes in and can go deeper into analysis and do competitive analytics. So all of that's available on our platform as we build it out. But that's kind of the basic view. And again, they're currently running at $47 billion a quarter in sales. That would mean in 3 years they're doing $177 billion a quarter in sales. Maybe that's not possible, and then you play with your growth rate, you can play with your margins, you can do a lot in our tool set to think about what to do with NVIDIA. I think that's enough with the numbers. I think let's go back now and just talk about that and say, well, yeah, again, if the sales growth trend continues, this is a, still an interesting investment. And on the other hand, if you think it's going to be hitting more of a wall, growth slowing. Again, the market expectation, as far as we read it, is 20%, down from 50 over the next 3 years.
Yeah, that's the tools are amazing that what you have presented. And now what I would do is I would marry this amazing tool with what the CEO have said. So a lot of the ambiguity or the projections will start to come to make sense. Now, backward looking, we see that the Blackwell, which is their flagship enterprise product here, like you said, grew 46.7 billion for the quarter. That's over 56% year over year. Now, for the continuation for this build out for data center, they expect no less than 17 growth, continuously, right? No less than that. So we see that Blackwell as the core driver of this AI revolution. Now, then you have other things that's going on. For example, the growth or the expansion of reasoning, in AI and agentic AI, and how that is going to play into software and into everyday's life instead of just having this accessible through chatbots, right? So this emergence to this, physical AI opportunity. And on top of that will be the expansion into robotics. And it's not, any specific type of robots. I'm talking about all kinds of robots across the board. This ensures the future growth, and as Jensen Huang puts it. So this.
So I'm sorry. So you said, and you said he was targeting. You said 17% on the Blackwell.
Just the Blackwell.
Right.
As the core AI. But when when you add the reasoning, growth in large language models, when you add the current development in humanoid robots and different type of
Right, so
robots,
it's all,
as
it's
well
all,
as
right,
into physical AI,
right.
that ensures their continuation of that projection. Now, of course, this is a projection, but he is very sure that this is the path that's leading to it. And I think a lot of people would agree. A lot of analysts on the street do agree. Now the stock did trade down from the $180 level to about 167, and since
Yeah.
then we did see some buy calls,
Oh, so then the
meaning a
return's
buy
even
signal.
higher, right, than what we hit when then we what we just showed, which is
Right,
that
right.
I think, going back to your kind of reflection of their guidance, understanding how companies guide the market is also an important skill and something that we actually, do absolutely discuss at IVoT, when we discuss how to be, and this is fundamental analysis. This is classic, like how do you really value a company?
Yeah,
And it can be a high growth company, like NVIDIA in this case. Even a high growth company that looks very expensive on a PE ratio can actually be very cheap if you understand cash
yeah.
flow growth in this case. Now,
And and
I
then
would
one
also,
thing I didn't mention before is that he also mentioned that there are new negotiations between China and the US. And he sees that this negotiation is going to play out actually quite positively. So
yeah,
there's another at least $50 billion worth of revenue that he believes that it's going to pick up, for doing business in China. Yeah,
interesting.
yeah,
Well, and I was just going to make a very simple point, which is when a company provides future guidance,
yeah,
the one thing they don't want to do is miss the numbers. So
yeah.
they have to aim
Low.
20 to 30% at least below where they think they can do.
Exactly.
Because they
They
want to
want to.
walk in each quarter knowing that,
Hmm.
they're going to be, they're going to beat the numbers and everyone's going to feel good about it. And so that's really part of, their Wong's job and the whole, NVIDIA's job in terms of guiding the street is to not let things get out of hand.
Yeah,
And they've done a pretty good job considering their growth rate of keeping the street in check, having, expectations, um, align with what they want them to be, which is honestly good for a long-term investor. A company that does a good job of managing investor sentiment, you might call it, is actually reducing the volatility of that stock over the long term. And that actually makes it a better investment vehicle. Um,
yeah, yeah,
and
Which,
obviously creates trust in management. Yeah.
yeah.
well, this conversation is an excellent conversation that I wish everybody in the world could listen to. Uh, I think we need to end the show right now, but I
Yeah.
look forward to next week. And I appreciate Emile and Andrew with your insight. And this has been IVoT Academy, Eye on Investing. And I look forward to doing this again next week. Thank you.
Thanks,
See you
Ed.
soon.
See you next week for another fundamental update on the markets, an update on Boeing based on recent results, and a preview of NVIDIA's upcoming quarter. Thank you for watching IVoT Eye on Investing. Please subscribe to our YouTube channel and click on the link in the description to register for early access to the platform opening soon, which includes access to our powerful IVoT forecasters and fundamental investment training.